Oh, hi everyone, and welcome to this session where we are going to be looking at day trading stocks. I know some of you have been with us at the previous session, which was only about 20 minutes ago, and so welcome back. And I know some of you are joining us for the first time. And just let me explain, we used to kind of wrap all this up into one session up until last week, but we've actually pulled the stock bit completely out and separately, primarily because now we have the radar screen scanner from Tradestation. It allows us to do all sorts of brilliant things, sifting through stocks, as it were. And also, I want to pay a little bit more attention to how you actually look at selecting stocks, potential stocks for day trading, which is a whole, whole topic of its own. But what I'd like to do is sort of gradually introduce different elements of that as we progress with these sessions. But as always, before we start, I have to draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And I'm afraid I'm going to have to go through these again because I know there are some new people with us for this session. Very quickly, we are going to be looking at the charts using a volume price analysis, which is, those of you who have the book already will know the methodology is the relationship between the price action and volume. And I have to say, with this methodology, regardless of how you select a stock, what the methodology will do for you, it will actually confirm whether what you're looking at on your chart is valid or not, because that's all we want to do. We want to seek validation of what we are looking at on the chart. In other words, the move is going to continue, or are we looking at a potential reversal? And that's really just, to boil it down to its essentials, as it were. The book now is accompanied with a companion which has some worked examples of the methodology. As most things in trading and in investing, everything works on cycles. Price action is fractal in the sense that the price cycle that you see on one time frame repeats, will go through the same cycle on another time frame. Clearly, it will go either faster or slower depending on the time frame in question. And as I said earlier, once you have the examples that are on there, there's 200 in this book. You will recognize them, you will spot them instantly on a chart. And as I said earlier, and I will always say, volume price analysis, yes, it is price action and volume, but it has these other elements in it. We use candles. We use candles as opposed to price bars, but that's up to you whether you want to stick with bars, because candles have a lot of patterns. They help with pattern recognition on a chart. And the fifth element, and last on the list, but by no means the least important, is the most important, is support and resistance. And on top of that, you then add on indicators, proprietary standard indicators. But this is the base methodology. This is the way you look at the chart, analyze the chart, and have a pretty good idea of where you are in the price cycle, but most important of all, what is going to happen next in the price cycle, which is really all we want to know. Right, as I said earlier, this is a new session for us where we are only going to be looking at stocks. And what I'd like to start with very, very quickly is just have an overview of what the kind of sentiment we have at the moment. As we can see here, obviously it is the inauguration today of President Biden, and how is the market sort of responding? Well, it seems very positive in the sense that the Dow futures are up, the S&P futures are up, and I think David was saying the NASDAQ is absolutely soaring. And he did mention an interesting fact about the NASDAQ, and that is that in terms of breadth, and by that means a look inside what the individual components of the market is doing, I believe the percentage of stocks in the NASDAQ over their 200-day moving average is at the highest since 2004. So probably setting up for a reversal, wouldn't you say, David? But he also mentioned there's all sorts of weird things going on in the market as well. That's what the sentiment is at the moment. Other thing is to check out, are there any important items of general fundamental news? And all I can see here, no, Powell's not speaking. Yellen spoke yesterday. It's quite funny, actually. Those of you who are forex traders or who maybe have been involved with forex will know she was the head of the Federal Reserve. She's now back as the Treasury Secretary, so we'll be hearing a lot more from her in the coming weeks and months. So generally speaking, there's nothing there that is going to impact the market. There's no major piece of fundamental news such as employment data, retail sales, etc. But there is we are actually in a very important phase of the cycle for stocks, and that is let me have a look, where are we? So the bar chart, let's have a look. Earnings, indeed, earnings. Sometimes known as the bane of day traders, but it really, they occur, they happen. The advantage we have with earnings is we know exactly when they are going to occur. So if you are a trader that trades a basket, that you have put together a portfolio of 10, 20, I don't know how many stocks that you want to look at, then it's really key that you know when these earnings are due, and we're in for a whole raft of them over the next week or so. This is one of the sites that I think is well worth a look, unless you have this information coming through on your platform. This is bar chart. I have to say, since the last time I saw bar chart, it's a very attractive site, and certainly well worth investigating. Basically, it tells us this is for the next 7 days. Here we are. These are the ones coming up. Some have already happened. They come pre-market. Some will be post-market. And it's really, really have to be aware of, what is going on the earnings front, because, as I said, it can be one of, not the downsides of day trading stocks, but you do have these periods when you, it is going to move the stock. You have gap ups, gap downs, all sorts of things. But if you understand VPA, you can overcome that. Now, the one element I was also going to talk about is the options market, but I'm not going to do it in this session. I'm going to do it in a little bit at a time as we move forward, because the options market is, with so many retail traders coming into this world, either stock trading, but also in options trading. It's become so easy, so much easier than when we were around. It's literally on an app on your phone. Knowing what is going on in the options market has, I would say, a very close relationship to what is also happening on the chart for the stock itself. So there's nothing on there of the ones that I'm going to be looking at, but it's something to be aware of. If you're a trader who is simply looking for an opportunity, then you've got to come up with some kind of checklist, some kind of framework for selecting your stocks that you think are potentially going to be moving today. And the metrics that you use, I mean, how long is a piece of string? We could do sessions and sessions about, what you should be looking at, what you should be filtering for on a site such as bar chart. I also use Finviz. These are all free sites, by the way. There are paid services as well. When we were doing stocks back in the day, on a more sort of regular basis, we used a company called, is it ChartSmart, David? Yeah. And to be honest, we kind of kept it really simple. The metric we used at was a 2% move, and also I would actually, David and I would actually go through the stocks, manually, as it were, because with VPA. And you say, well, how can you go through all these stocks manually? because this is the other beauty of volume price analysis. And I go back to that book of examples. Once you know where the chart is at, what phase of price action the chart is at. Is it in a trend? Is it in a congestion? Is it a congestion with volatility? Is it in a tight range, as it were? You can go through literally hundreds of charts and you can say yes, yes, no, no, watch list, etc., etc. This is how we used to do it, and it was primarily because we knew what we were looking at in terms of the chart, the patterns, the structure of the chart using volume price analysis. Right, this is FinViz. I've only just put this together. It's part of what I'm going to be talking about this a little bit more detail later on. It's basically, you know, you can see the search fields here. I've kept it very simple. I've looked at the size, the market cap of the stocks, because otherwise you could end up with thousands of them. I've actually got 10 billion to 200, and I've added the mid, which is over 2. What else have I added here? I haven't looked at the short, the ones that are at the moment. This is another, again, just, you know, going off slightly to tangent. One metric that some day traders use is basically the number of stocks, the number of companies that are very heavily shorted, because when a company is very heavy, you know, has a lot of shorts on it, then it's often the subject of a short squeeze. In other words, you know, the price goes the other way. If you take Tesla, for example, this time last year with Tesla, it was probably the most shorted company in the US market, and look at it today. A relative volume, again, I'll explain that in another session, but I've gone over 2, and this is the float. Now, this is actually quite important, and again, it's something I want to talk about much more detail on its own, but it essentially is how many shares are actually available that are available to trade, that are not allocated. And again, if you understand, if you go back to VPA and you put yourself, the other element of VPA is it puts you in the shoes of the market maker. I had an email a couple of weeks ago from someone who was asking that this is an auction. This is not an auction. Stocks do not operate as an auction, because each company that is represented in the markets has a market maker, has what Richard Ney used to called a specialist. It is usually a bank, but there are these specialists who are responsible for managing the shares of that particular company. So however many shares are issued, either with an IPO, you perhaps get a stock split. So the shares, once they've been allocated to people who work for the company, they've been bought by institutions, etc., etc., there will be a body of shares left that are there for other investors, traders. And what happens is, when you have a float that is very large, it is more difficult to move that share price as the market maker, because the market maker is there to make a price. He will, you know, when you buy if you buy something from a broker, he will quote you one price, but you want to go and sell it again, you won't get what you pay for it, you will get less. So that's all explained in the book. Where you have shares where the float is not so wide, it's quite small, it's more illiquid, you get more volatility, you get moves, you do get bigger moves, but with volatility comes greater risk. But I'll talk about the float in more detail later on. So basically what FinViz did is delivered 9, really not that many. So this is sort of an initial selection. It also brings up all the stocks from, I don't want the UK, I don't want India, I don't want China, I just want US. So I'd have to go in and filter them again. Finally, in filters, Stock Beep. I came across this when I was looking at relative volume, and it's a really, really nice site. But again, you apply the principles of volume price analysis. You can filter in all sorts of ways. And if you think about it, so these are stocks that have achieved new highs. So therefore, are they ripe for a reversal? new lows? Are they ripe for reversal, a breakout? Has it been in a congestion? Because once you look at your criteria for stock selection, you then have to match that with what kind of chart setup you like to trade. Do you like to trade reversals? Well, if you do like to trade reversals, what would you be looking at? You would be looking at all-time highs and all-time lows, because the chances are it may not reverse today, but it might reverse tomorrow or next week. Gap higher or gap lower? Well, you have gaps get filled, you're going to get a reversal. Is it up on high relative volume? Is it therefore on, is it going to continue higher? Are you going to look for a continuation? Again, VPA, the basics of VPA will help you determine whether, first of all, these stocks that have been selected for you by a scanning company, a piece of software, how does they sit within the VPA methodology? Right, but as I said, I'm going to take elements of that and expand on them as we go through these, in the following weeks. I won't do the whole thing again. I'll just take one element and as I said, expand it. So if you want to ask any questions, please just put them into the chat box about anything really, and we'll answer them on air for you. Right, so what have I done then? Okay, now hopefully you will be able to see these, because the reason, as I said, I wanted to do stock trading separately is, we've been talking about this for so many weeks now, months, is we now have our indicators programmed for Tradestation. Tradestation is a platform David and I used regularly about 8 years ago, David? Yeah. So it's had a few iterations since then. This is the latest version of the platform. This is Tradestation 10. And one of the most powerful features of the platform is this part of the platform, which is called a radar screen. Now, what radar screen does, hopefully I can expand it. I'm still actually getting used to it.
It's the middle one.
Yeah. Where is it?
Right over on the right hand side. Keep going, keep going.
I'll just come like that. That's fine. Can you see? That's intervaling.
No, there. That's it.
That one.
Yeah, that one.
Right. How's it coming out on your screen? It's very small, isn't it?
It's quite small.
Yes, you'll have to forgive me. I'm going to have to adjust the resolution on my computer. I have another screen, but if I move it onto the other screen, you won't be able to see it. So, as I said, I'm going to have to do something about this, and so that you'll be able to see it better. But I haven't got many stocks up here at the moment. The stocks I have got they're related to the stocks that we have done analysis on my blog, which is annacooley.com. But I just want to show you what I've done in terms of setup, because what you do with the radar screen is very, very powerful. Dave, I'll pass over to David and he can explain what it will do for you in much more detail. But one of the things it does, it allows you to add in indicators, standard indicators and proprietary indicators. And how I've set this up is I've obviously got I've got a time interval. I've got 5 minutes. It gives me the high of the stock. And what I've programmed as the very first indicator, which I think is probably the most important indicator if you are going to be trading anything, but stocks in particular, and that is our volatility indicator, because it fires in real time. And what it does, it's based on ATR, average true range, and when the price action goes outside of the average true range, the indicator then paints on the screen, on the chart, and we will see it. And the reason I've put it up here is because more times than not, I don't have the precise percentage, but it's a very high percentage. When the volatility is triggered, you can pretty much be certain that you will get some kind of reversal, either into the spread of the candle, which will lead to a reversal, or you will get congestion. So not only does it tell you a potential setup, but if you are already in a trade and this fires, particularly on, say, a slightly slower time frame chart. I've got the 5-minute chart, but if you, it works really well on something like an hourly chart. So you could be in a move in a faster chart and it's going really, really well. And you think, oh, great, this is, this is going higher and higher. This is triggered on the slower time frame. I would say over 90% of the time that is going to reverse. That is without a question. So that's why I have put it as the first indicator, because I want to see volatility. I want to see the price moving out of its average true range. It doesn't mean I'm going to jump, because with volatility, when price does that, that is the perfect time for market makers. It sucks traders in who've been sitting in the sidelines, watching, and they say, and it goes up and up. They jump in, and suddenly the indicator is triggered, and blow me down, it reverses. So that's why. Then I've put the trend dots, which are on the candles themselves. So obviously this is, I'm going to look at Kellogg's in particular, because there was a volatility trigger which actually highlighted, which is really important, that they're red. I won't talk about the trend line at the moment. Then the trend bar, this is actually the trend monitor, so that tells me that is in a downtrend. I have the volume point of control, and I've got the nearest support resistance line, and it's been tested 2 times. But I don't want to, really just want to focus on the volatility. So let me just, I've got that, reduce that down, and we'll look at the Kellogg's chart in more detail, and then I'll pass over to David. So I know there was a volatility trigger on, this was the 5-minute chart for Kellogg's. Let's just pull that up. Hopefully you'll be able to see that. Okay, right. This,
take that command line off.
how do I take the command line off?
Just click on it.
Oh, sorry about that. Yes, I was there. Okay, Kellogg's is really interesting. And as I said, with VPA, this just happens to be Kellogg, and it could be any ticker, because we're looking at the price action. Let's go back to yesterday, and what did we have here? Well, we had a volatility candle here, and that triggered. The price did actually reverse back into the spread of the candle, but it did carry on lower. But it went straight into the volume point of control here. Volume point of control is based, the VPOC is based on the principles of volume at price, which is basically price action and volume over time. And this, the volume point of control itself, which is this yellow hatch line, is at the point where you see this bulge that we have here. This is where it's been at this price level for the longest time. But this is a really nice example here. This it then shot straight back up again. A lot of volume underneath it. It was about what was it, 940, 950. Triggered, as I said, straight back into that, and we actually got. This is where traders would have been trapped. This is where traders would have been trapped. In fact, traders, this is a nice downtrend in Kellogg's. It gets to the volume point of control, triggered into the spread of the candle, and back to the volume point of control. As I said, congestion, a lot of volume under there. It's, doesn't go very far. It's a kind of an anomaly, but certainly price support coming in there. But this is towards the end of the trading session, and we get another volatility candle. We do get a sort of retrace into it, but it's the end of the session. So maybe, what's going to go on, maybe traders are closing out or what have you. But this candle here, which is the last candle with this volume underneath it, is really, really anomalous, because if that, I know it's the end of the session, but that buying coming in here towards the end, not pushing that higher, would have suggested that, as I said, it ends on an anomalous candle. So when this opens today, what happens? The price absolutely, it's just craters. This is the volatility candle that was triggered and picked up by on the radar screen. Then we have, as I said, when you have volatility, there's a number of things you do. If you're already in that trade and that triggers, and it's been a good move, you get out. That's it, because you can always go in later, because what happens with volatility candle, the low and the high of the candle are then their own, it's another way of registering support and resistance. It goes into the spread of the candle. Interestingly, there's very little volume under that candle. So is it going to go very far as a reversal? The answer, no. And in fact, we have another down candle, and where would you say, well, where would, you know, when is the point where you would look to get in? And you would look to get in once the low of that the volatility candle is cleared, as it were, because that tells us that this move is going to carry on, and in fact it does, and it goes to the final support line for this is all part of the volume point of control. This is the point of control itself, and this is the I haven't thought of it's again, it's support and resistance based on volume, and this often price simply reverses at this level here. And we can see here we have these candles. They're very weak candles because yes, we've got a 2-bar reversal there. Not a lot of volume under that 2-bar, under the up candle. This is the other thing, when you have a 2-bar reversal, if you put those together, you kind of get a hammer candle. What you want to see is you want to see a lot of volume under the it's not quite a bullish engulfing, but the 2-bar reversal, you want to see at least equal volume. So what does that tell you? It's probably not going to go very far, and it doesn't. You've got wicks to the top of the candle, very sort of average volume, weak candle there, and then the price goes back. But where does it go back to? Support and resistance. You've really got to fix in your mind support and resistance, however you measure it. We measure it on price, we measure it with volume, and we also measure it with the Camarilla levels here that you can see on the screen. But the takeaway from what I've just said is essentially how you do your stock selection. Look at those at the sites that I've suggested. I'm going to go into more detail on the different the different ways you can do it. Using the radar screen, why volatility, why this indicator can not only get you into trades, get you out of trades, highlight different trades. You know, it's just a myriad of ways. Yes, and then as David has said, if you actually look at the trend dots and the trend monitor together, they have stayed consistently red, even as this price has been falling, retracing, falling and retracing. These two indicators are also telling you that this is still a bearish move, and it's now coming up to the S4. As you can see here, it couldn't get past the S4, so the chances are it may, it's going to need a lot of volume. Again, coming back to volume price analysis, if it's going to go past there, it needs effort. It needs, result, effort and result, as Richard Wyckoff said. Right, I'm going to stop there. Hold on, I'm going to pass over to David. As I said, if you answered the questions, David, let's have a look. Do you want to do that, Tommy?
Yeah.
Okay, this about candles, just an very important question. Oh, pinch zoom on my iPad. Oh, thank you. Yes, wish I had it. You can zoom in, usually go to interface 150. Okay, I'll have a look at that, Chris. I'll see what I'll see if I can improve on that one. But meantime, I will play around with that and I will pass over to David.
Hopefully you can hear me. Hopefully you can see my screen. Yeah. I've just switched over to NinjaTrader. I've got the humble scanner down here, which I have to say, well, I won't be rude about it. NinjaTrader, lovely company, great platform, but I'm afraid their scanner is not in the same class as Tradestation, I have to say, which is just awesome. Just to answer your question, Tommy, which was about how do you measure wide candle? Is it including wick up or down? The wicks are the most important aspect of any candle because they reveal major buying, major selling. weakness. So it's always a question of looking at the wick, and then it's a question of looking at the body. And it's really just comparative when you're looking at, I don't know, let's pop this one up. This is Procter Gamble. There we go. This is Procter Gamble. I'm on 2 minute here, so this is obviously intraday scalping on this one. What do you classify as a widespread candle? What do you classify as narrow spread? It will depend on what session you're trading. It will depend on what instrument you're trading, but it is all comparative because the whole essence of volume price analysis is a comparative methodology which you apply to that particular session. So you're not looking, sorry, I've got all the Tradestation alerts coming in. So you're not looking across different sessions. You're not looking at different markets. You're really just comparing. And if you take this, I suppose, is actually a decent example. This is where we get underway. So yeah, you've got a widespread candle and it's got a big wick to the upper body. So that's a widespread candle, narrow body, but big wicks to that candle. This is a widespread candle because in comparison to what is going on over here, what is in that little segment of time, which is what, just over an hour or so, what is considered a large candle, in other words, a wide body, what is considered a large wick, what is considered a small wick, what is considered narrow. These are narrow spread candles. These you probably say, well, they're kind of average, and these are twice that, 2 or 3 times that. So what I'm trying to say is there's no rule book to say, well, this is what we classify as a widespread candle, this is what we classify as a narrow spread candle, this is what we classify as a large wick, a small wick, whatever. It is all comparative to the chart you're looking at. And it's just a case of, it's something you learn over time. It's instinctive, it's intuitive, I guess, in some ways, that you look at a chart and you'll say, okay, yeah, I've got a big widespread candle there, I've got a narrow spread candle there, a bunch of narrow spread candles, whatever. But it's against the context of that particular chart. If I go over to gold or I go to another stock or whatever it is, then it'll be a completely different metric. And it's also that analysis, if you will, also applies to whether you're looking at either the volume and also the candles themselves, because one of the aspects of volume price analysis is to look at to have a benchmark candle. So when you see something which is anomalous, at least you've got something to benchmark it against. So for example, I don't know, let's say this candle, say this was your benchmark candle and this was your benchmark volume under here. And remember, this is all distorted by what's gone on at the start here. But if this was your benchmark candle, and then perhaps later on in the session, you see a candle of a similar size, but has got 2 or 3 times the volume under it, then that alone is telling you it is anomalous. Because if you're in the same session, which we are here, so we can compare apples with apples through here, and you've got this and you're saying, well, yeah, that's my benchmark because the market was up and running and the price action was that and the volume was that. And then somewhere down here, you get a rally and it's on maybe 3 times that level of volume, but a similar sort of spread of candle. What that's telling you is it's anomalous because you've got far too much volume. If that's your benchmark, then everything else, all things being equal, and let's face it, in trading, it's not that simple, but all things being equal, you would expect to see something similar going on. And if you see something which is dissimilar, and it just raises a red flag to you, and that's part and parcel of the subtleties, I suppose, of volume price analysis. As we go through it. I mean, you've got anomalies here. It's just literally come in. I'm not sure. I think this is pretty quick. This is on a 1 minute. Okay, pop that up. I'm just going to scroll this over to get rid of this big spike, because what this big spike is doing is basically condensing all this volume down, which is making it more difficult to read. If I do that, and it's an easy way of just, if you get into that situation. So now you're looking at it and thinking, okay, where are the anomalous candles? Well, this one sticks out like a sore thumb. You've got a volatility trigger on there. You've got a huge wick to the upper body, lots of volume going into it. Is that a sign of strength or weakness? Well, clearly it's a sign of weakness. It's not a sign of strength. You've then got, you've got this level of price resistance coming into play, which is on the accumulation distribution indicator, which presents these levels as areas of increasing strength. So these little ones here, which have only been tested once, are minor, whereas this is a major. and it's based on price. So, you know, the market comes up there, it's testing it, doesn't really get through it, and it caps it off, and off down we go. Then you start to look at these candles down here. You're looking at the volume. You've got rising volume, falling market. That's a good sign. You know, it's a sign of weakness, confirming the weakness in that particular trend. But it was really signaled, you know, the start of that all was really signaled over here. And going back to the question from Tommy about, you know, how do we classify a widespread candle? Well, you know, maybe that is your benchmark candle. We've got lots of volume under there and a decent size of candle. So maybe that's what you consider as your benchmark candle. Then we've got an equivalent amount of volume goes in here. The market goes 1.5 times that on the same amount of volume, but then there's a big wick to the upper body. So we know for a fact we've got a ton of selling coming in there anyway. So just coming back down to this little bit here, just squeeze over a bit more. You know, there's a little bit of buying coming in there. Why is there a bit of buying coming in there? Because the market fell, it rallied a little bit. It's not enough to reverse the trend, but certainly it's enough to tell you that yes, there's a little bit of buying coming in there. We see a little bit of a rally, comes back up to the volume point of control. Are we going to go through this and suddenly rocket up here? The short answer is no. Because once we get to the volume point of control where the yellow line is, which is why it's so important to have it again on the radar screen, just to tell you where all these levels are, because you've got this absolute heap of volume which extends all the way out over here somewhere. In addition to that, you've got two very strong levels, one of resistance above the red line, one of support below. Now the support line below appears to be being breached at the moment. So you've got really this level here, which is pressing down. You've got the volume point of control with this absolute heap of volume here and not a lot underneath. And it's, if I scroll out to the bigger picture for this particular stock, I'll show you why, you know, it's one of the stocks, in the same way that I like to trade short in other markets, I like to trade short in this market as well, because for the simple reason that markets generally fall much faster than they ever rise. And you know, it's an inbuilt thing I have to deal with. It's part and parcel of you know, one of my weaknesses of trading, but I'm well aware of it. And this is just a classic example of that. And I have to say Kellogg's was a very similar example to this. I can pull Kellogg's up as well and show you in multiple time frames. You know, you get the rally, fullback, rally, okay, rally, we get, you know, volatility trigger, we get reversal, fine, it's what we expect, come back down onto the volume point of control. Bear in mind, this is the daily, so this is a long, slow process. What we're looking for is this breakaway from the volume point of control. It hinted at it there, but it rallied back again. Now we're starting to see it, and once you start to see this sort of price action in a downtrend, the market's trying to rally, wick to the upper body, volume coming in there, you know, that is a pretty sure signal that this is a pretty fragile market. We get a big move yesterday, get that out of the way. Trying to rally again, you might not be able to see the wick there, but it's there, and it's falling, and the trend monitor has now transitioned to red. But basically, what you're falling into down here is free space. There's nothing below. I haven't got the accumulation distribution on here, but there's nothing below that. And more particularly, the reason they are so powerful is because once the volume here starts to move to fall away, it then no longer offers that element of support, because support can be price-based or volume-based, and exactly the same way as resistance as well. If this market were to be breaking to the upside, it would get through this area fairly easily because it's a relatively low volume area. But once it gets back up here, it's got to get through this lot. Then eventually it'll get up into lower volume here. And it's exactly the same principle. It doesn't matter whether you're on the daily chart or whether you're on a 5-minute chart. In fact, if I flick over onto Kellogg, which I think I've got here somewhere, I've not got many here. There we go, that one. There we go. This is Kellogg. I mean, this is just, we wrote about this, been writing about this for some time. What we were looking at was a break below this level here. Once it started to break away from the volume point of control, this level then came into play because it was pressing down. This was acting as support, but once that is breached, look at the speed it goes through this area here because you've got low volume. The reason we're seeing a pause point in here is because we had a higher volume region which has been built with these 2 or 3 days as well. And now we're starting to see this break down further. We're coming down to this, this volume is falling away. We're seeing increasing momentum in this stock. and it's just falling away dramatically. You can see the trend monitor at the bottom here, consistently red. We had a minor little pause point in here where we went to darker red, but it was really insignificant. We've come back out the other side into bright red, really just signaling how bearish this stock is. As I say, I think we were looking at it was about $62, something up here. So it's a really nice grab. In terms of trading short, there are lots of different ways of doing it. You can trade through, if you have an account with your broker, what will happen is, if you want a shorter stock, your broker will lend you the stock. In other words, they will borrow the stock from someone who holds it. Perfectly legitimate, it happens all the time. They will lend you the stock, but be aware, if you go that particular route, that you are then responsible for any dividends to pay out. So just be aware of it. The more straightforward way to do it is to use the options market, because you can use puts and calls, and buying puts or calls, the risk on that position is the cost of the call. It's as simple as that. So it's a very low risk proposition. It's low risk in terms of monetary value on the table. You're not actually holding the shares. If you want to sell the stock, then you've got to cover it with risk, with options. And you can't sell, well, you can sell options naked, but it's not recommended. It's high risk. So the simple way to trade this will be to buy puts, because puts increase in value as a stock falls, and they fall in value as a stock rise, and calls are the opposite. So if you're looking to go long, you buy calls. If you're looking to go short, you buy puts. Very simple. But it's all down to the chart analysis. And what's changed dramatically, I suppose, since we started 20 odd years ago, it's changed hugely, is the whole options market. When we started, it was very limited. Certainly in the UK, we were limited to very few companies at that time, and you had to hold 1,000 of the underlying to cover it. In the US, it's always been 100. So it's less onerous, but if you're dealing with high value stocks, then it's a lot of money to put out on the table, which is why options trading is so popular. And nowadays you've got all these other myriads of timeframes. You've got weekly options, all sorts of things that you can apply to this particular market. So this looks pretty. What time frame are we on here? This is on 15 minutes. Just pop that up. Look at the 15-minute chart, pretty much the same. We've had a volatility trigger there. You can see we've gone way past the S6, so we have to go up to the next time frame or slower time frame to see where the next level is coming to. Sorry, I'm going to click all these off at some point. But you can see the weakness here. The market's trying to rally, wick to the upper body. The wick is not to the downside. The wick is to the upside. So we've got volume going in here, and the market's trying to rally, and it's falling back. The market tries to rally. Okay. Price and volume are in agreement, but the attempt to rally is very weak. It's not strong. The spread is narrow. We then get another effort to rally. Again, it's almost exactly the same as this. Less volume going in, but it's just symptomatic of the fact that this market is trying to rally and just cannot rally itself off the floor. So where is it going next? Down to 57 and on downwards. So there's lots of other stocks there. I won't go through them all, but hopefully that's given you a flavor of what we're going to be doing in these sessions. We will get the Tradestation more populated, and we'll get that populated over the week. It was the first one today. So we've got Tradestation 9.5. That is very much going to dedicate that much more to currency futures, so the currency markets. But this session will stick to Tradestation version 10 and above, which is a fantastic platform. Just starting to see that break down a little bit now. See the volume coming in here, trying to rally. We've got this little cluster on the accumulation and distribution indicator. These two independently are quite strong, but when you bolt them together like that, then that is a very strong ceiling of resistance. So when you get little clusters of these, very powerful. Individually, they're strong, but when you bunch them together, very powerful indeed. As I say, you can probably see the numbers here. This has been tested once. There's one here that's just sitting above the VPOC twice. This one's a little bit thicker. That's been tested 3. These have been tested 4. Nice. And we've also got a little volatility candle coming on that one now. So what are we expecting? Possibly a reversal inside the spread of the candle. We've got good strong volume under there, so it's possibly expecting that to see to the market to rally a little bit back inside there. Maybe more congestion to follow before it drops out further to the downside. And it really doesn't matter whether this is a stock or it's a commodity or it's a soft commodity or a currency future or indeed anything at all. The principles of application of the indicators and a volume price analysis are identical. Right, I think I'm going to draw a line there and just run you through. Oh, sorry, were there questions? Beg your pardon. Sorry, I always have the chat box closed. It's not being rude or anything. I just I like to focus on the charts. Apologies. You're welcome, Tommy. Thank you. Tommy, you can only trade long for stocks. Interesting. I didn't know that. Thank you. But you know, that's that's only my bias. The interesting thing with the stock market, of course, is it does always have this inbuilt, I can't think what the word is, but it has an inbuilt bias to the long side. I think everyone you talk to, whenever you talk to anyone about stock markets, stock traders, whatever it is, the perception is always that the market is going to go higher. You know, that's the inbuilt DNA, I suppose, of it. So it's not a bad thing, but you've always got to be aware of the fact that, you know, it is a two-way market. Everybody, I suppose it's to do with longer term investment. Everyone's brought up on this idea of holding stocks for 15, 20 years and having portfolios based around them, and et cetera, blah, blah, blah. So the market's always got to go up. A bit similar to gold, I suppose, in that respect. So, you know, just be aware of it. Yep, I agree. It's fine. You have no problem going long. I just, you know, I do look for shorts on this market, as indeed I do elsewhere. Ari, do you consider pre-post market in pivot points? One of the things we are going to be doing is obviously there is a lot of focus on particularly on the pre-market, particularly in terms of levels. So yes, it is certainly important. It's less important, I would say, from a volume perspective, because clearly the volumes are not going to be as significant as they would be once the market is open. However, in terms of the importance of it, yes, it is important, particularly, as I say, in terms of setting levels, looking for those potential areas where price is going to hit, or price, you know, it's going to find resistance, or maybe going to find support. And they kind of, I know a lot of traders, day traders, intraday traders, that's how they set their stall out. They start with the pre-market, and they're looking for those opportunities based on the levels that are being reached and how the price is reacting to those levels in the pre-market, and then trying to overlay that onto what is their tactical approach in the cash markets once they open. So yeah, they are important for sure. And again, I have to be honest with you, it's something that we never had when we started 21 years ago. There was no such thing. You know, pre-market didn't exist. 24/7 markets didn't exist. That has all, you know, changed in recent times, and you know, it just adds another dimension.
Pre-market also chews through a lot of volume. If it's chewed through a lot of volume, that's it. Every chart,
yeah,
every stock has kind of average volume.
Yeah, and as Anna said, you know, the pre-market can chew through quite a bit of volume. It's not as demonstrable, but it can chew through volume, and that you know, draws volume out of the cash markets as well. So it is, to answer your question, yes, it is important, and we will certainly be focusing on that as well. So there we go. We saw the little rally there. There we are. Just to, I suppose, round off a little bit. There we are. Just move that back out the way. We had the little rally there into congestion. It's what we expect to see, and that's what VPA is about, and that's what the indicator is about. They give you that advanced information which stops you making knee-jerk trading reactions based on emotion. So all your reactions here, all your decision making, will be based on common sense logic applied to the chart, and not on a knee-jerk emotional reaction based on something you've seen. This is where you'll find us all, or Anna at any rate. AnnaCooling.com, all the books up here on Amazon, Kindle and paperback format. You'll find links to all the sites here, to the various platforms, and also to the Forex program. This is where you'll find all the indicators, MT45, NinjaTrader 7.8, TradingView, and also Tradestation, which, as I say, is available in 2 versions. It's 9.5, which is the partnership with Interactive Brokers. So if you have an account with Interactive Brokers, you can link it to Tradestation and trade straight through the platform. The Tradestation Securities version is on 10 and above. And the primary difference, I guess, is in the radar screen, where you have 400 available on 9.5, and it goes up to 1,000 on Tradestation Securities. So you've got 1,000 cells you can have running simultaneously, which is why it's so powerful for stocks. We're working on the TradingView indicators. They're being ported across. Those are the ones for the currency trading, currency array, currency matrix, and currency dashboard. And the VPOC and support and resistance, they will be available in due course on TradingView. And that will then be a complete package, and the price, I'm afraid, will be going up on that, so it's not a bad time to invest there as well. And I have to say, TradingView, I do like TradingView as a platform. It's very, very good. I use it for the little FXCM account, and I've really got comfortable with it, and it's a super platform. And of course, you've got stocks over there as well. So, you know, all the indicators we've got on Tradestation, on NinjaTrader, they will be available over on TradingView also. Finally, very quickly, this is the currency trade. This is the complete Forex trading program over at quantumtradingeducation.com with the funded program, which we've bolted in, which you can trade our money up to $2 million if you so care to choose to do so. Thank you very much indeed for coming along today. I know some of you have been with us for all 3 webinars, so I admire your tenacity and your dedication. It is much appreciated. We do enjoy doing them. You will receive weekly updates through your email with the next ones for next week. They may change around time frame wise, or perhaps days, depending on how we want to work around it. Some people like to come on one day and some can't make others, so we try to mix it up a little bit so everyone gets to come along live. So you will get all the details in due course of the next ones for next week. So thank you very much indeed for coming along today. Hope you've enjoyed it. Hope you found it useful, and enjoy the rest of the trading session. There's a lot of volatility. Tell you now, there's a lot of volatility going on with what is going on with the presidential election. The dollar has shot up. This is on 15. We had a volatility. It's then promptly reversed. It's gone down again. We've got another volatility. It's now rocketing up again. The yen pairs are all over the place. Generally speaking, they're falling, but the Canadian is rising. So there's all sorts of things going on. So this afternoon, I would say, is quite tricky. There will be opportunities, but they will be volatile ones. So thanks a lot for coming along today. Hope you've enjoyed it, and see you again soon, and bye for now.